Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. And so today we want to talk about LLCs being taxed as S-Corps. I'm going to start this off by saying this might not exactly turn out the way that you want it to. So let me say up front that I'm not here as a tax professional. And when I do these videos, I'm not here to tell you what you want to hear. I'm here to tell you what you need to know. And when I do videos like this, I often get a lot of pushback because I'm combating street committee tax advice. So understand that I am a tax professional. I'm not your tax professional. You go and consult with your tax professional based on your situation, because everybody's situation is different. All right. So when people start looking at forming an S-Corp from and I would say electing S-Corp from an LLC, it's generally to save on self-employment tax. So if you are a single member LLC, you are, as for tax purposes, you are treated as a sole proprietor. And so you are paying that self-employment tax. And after a while, based on your profits, that self-employment tax can get to be a pretty hefty amount. And then that's when you start looking at then the S corporation as a way to minimize the self-employment tax. So first of all, I want to let you know your self-employment tax, this is your Social Security and Medicare. So if that's not important to you, okay, great. And I'm not saying, go pay taxes out the wazoo just, for the purposes of Social Security and Medicare. I'm just letting you know what that is. Self-employment tax is your payments into your Social Security and Medicare. All right. So I got my notes over here to make sure I want to make sure I cover the highlights. All right. So the one thing that you want to know about an S-Corp is this is not a decision that you take lightly. This is not a decision that you go and get Google and YouTube educated on. Even watching my videos, guys, you can binge watch all of my videos. This is not enough information for you to make an educated decision about whether or not you should elect S corporation treatment for your LLC. Because, the issue with the S-Corp election is if you get into an S-Corp and then you decide, okay, this is not for me, you can revoke that election. But at that point, you can't become an S-Corp again for 5 years, even if you qualify to be an S-Corp and if it would be advantageous for you. So understand that this is not something that you I'm just going to become an S-Corp just because I'm trying to save on this self-employment tax. And then you realize it's not all that it's cracked up to be. So just know that if you revoke election status, you can't become an S-Corp again for 5 years. So now let's talk about the rules of an S-Corp. And this is where people tend to get hung up. It's not knowing the rules. They're so busy trying to save on self-employment tax that they don't learn the rules of the S-Corp. So one, all members of an S corporation must be U.S. citizens. A husband and wife are considered one partner. So what that means is that if you have a U.S. citizen and you marry a spouse that is not a U.S. citizen, you negate your ability to be a shareholder in an S-Corp. And if you are the owner of the S-Corp, you then revert to a C-Corp. Or if you are a shareholder, you're not an owner or anything like that, not actively involved, then you're going to need to remove yourself from that S-Corp, okay? Because husband and wife are considered one partner. Got to be a U.S. citizen. You can only have 100 shareholders in an S-Corp, whereas with an LLC, you can have as many members in an LLC as you want. I don't recommend that. I'm just saying that you can. And as a C corporation, you can have as many shareholders as you want. But with an S-Corp, you're limited to 100. So then the owner of the S-Corp has to be an employee of the business. That means that you must be on payroll. That means you must be, set yourself a pay schedule. You get paid a set amount, and you have to issue yourself a W-2 at the end of the year. Okay, this is not optional. Okay, and with that, you must pay yourself a reasonable salary. You know, and people kind of get hung up on the reasonable part. And, you know, when you're first getting started out as an S-Corp, you know, this is the thing. If you're a single member LLC and you can't pay yourself, then becoming an S-Corp is not going to help you. Okay? Just understand that. So, but now back to this reasonable salary. So if you're electing S corporation treatment from an LLC, you should be paying yourself anyway. But now as an S corp, it's going to be more structured. It's going to be on a paycheck. Okay, you just happen to be working for yourself. And then that reasonable salary, you know, how do you determine that? Well, the IRS goes through a certain number of questions to basically say, this is what you should be paying yourself. If you doing what you do, if you went and got a job, how much would you expect to make? Or if you hired someone to replace you, how much would you expect to pay them? So the thing that people want to do is when they get these S-Corps, they want to pay themselves, you know, $10,000 a year and then try to get the rest distributed without paying self-employment tax. But when you get busted, just know that the IRS can go back and reclassify your income. And then you've got employment tax penalties as well as other tax penalties that get racked up. Okay, I'm just letting you know. So one of the things that you don't want to do is try to lowball yourself. Because the lure of the S-Corp is that you pay yourself this reasonable salary. And then after the S-Corp pays its, you know, all of the expenses and everything, then anything that's left over from that is distributed to the owner. And there is no self-employment tax on that money. And while that's great, if you, like I said, try to lowball your own salary so you can take more of a distribution without paying self-employment tax, when you get audited and the IRS figures that out, just know that they can go back and reclassify that income. And I've seen that happen in court cases. It wasn't pretty. Okay. And the part about payroll that I also want to make clear is that with the payroll, you have to pay employment taxes to the government. Okay. You have the withholdings that you have to pay to the government, and not doing that, you can also land in a ton of hot water. That's a whole nother live broadcast to talk about the recovery penalties for that. It's ugly too. But just know that the IRS basically says if you can't pay your employment taxes, then there's no reason for you to be in business, and they can shut your business down. All right. Okay. Now, where I really want to get to is that when people are talking about S-Corps and paying taxes, a lot of times the focus is on the feds. What is basically trying to not pay the self-employment tax to the federal government. But nobody's talking about the state requirements for the S corporation. And that's what really can come back to bite you. Okay. Every state has different requirements for S-Corps. There are some states that don't even recognize S-Corporations. You're going to be a single member LLC, a sole proprietor, or you're going to file a corporate tax, okay? They don't even recognize the S corporation. There are some states that don't even have a state corporate tax. But like I said, we got 50 different states, 50 different sets of rules. And what you have to know is what are the rules for your state and how does that work out for you? Because you have, like I said, you've got states that don't even have a tax, but then you have states that have a minimum tax, and then you have states that have a gross receipts tax. So for instance, if you're in a minimum state tax, then they don't care how much profit you didn't make. You're going to pay a minimum amount. California is the first state that comes to mind. They have an $800 minimum tax for an S-Corp. So if you're just starting out and then you're trying to make money, again, it doesn't matter if you made money or not. You still owe that $800 minimum tax. Massachusetts is another state like that. They don't care how much money you didn't make. You owe at least $456. Okay. Now, also, there are states that have gross receipts tax that base your tax bill on the amount of money that you made, not the amount of profit. So if you went and made $1 million and you only had a profit of 100,000, well, guess what? You're going to pay based on that $1 million of income. Your gross receipts. That's just what it means. Gross receipts. How much money gross did you make? They're not taking into account any expenses or anything like that. This is what they're looking at, your gross receipts. So your tax is going to be based on how much money you made, not how much you profited. So I want to really help you get the fact that this is not something that you take lightly. You really need to do the math. And there is no one right answer for everyone. It depends on income. It depends on profits. It depends on where you live. It depends on even if your spouse has some boss out job that you might want to become an S-Corp sooner rather than later. But at the end of the day, you want to make sure that your business actually supports all of these compliance requirements. And I also saw something else that I want to clear up. I saw someone that said that they were informed that if you elect corporate treatment as an LLC, you don't have to abide by those rules. That is absolutely false. Okay, if you are a single member LLC and you elect to be treated as a S-Corp or as a C-Corp, you have to follow the rules of those business entities. Okay, so whether we're talking about the shareholders meetings, the taxation, whatever that business entity requires, you must follow those rules. If you elect this treatment, that's the reason for the election, right? Like, this is what I want you to understand. So like I said, moving from a single member LLC where you are the only member of the LLC to an S-Corp is not a decision to be taken lightly. You have got to look at the math. Does the math make sense? Okay. And that's based on your tax rate, but it's also based on the compliance piece, because you're going to need to outsource your payroll and bookkeeping. I do not care if you think you can do it all. If you are a smart business person, you will be outsourcing your bookkeeping and payroll to make sure that you meet the rules, because as a business owner, you do not have time to be trying to make sure all of your I's are dotted, T's are crossed, and you doing all the work. You need to outsource that, let someone else operate in their genius. You just go and make sure everything is done. Okay, this is why I'm saying, I get these business owners. We're in this whole entire DIY generation. There are some things that you just don't do yourself. Okay, plain and simple. I don't know how else to put that. So anyway, and the other thing that I want you to really keep in mind is, even though you are an LLC, when you elect these other types of entities, the getting in part is easy. It's the getting out that's hard. All right, because then you're really involved in the states, and even on the bookkeeping part, when you start getting into, S-Corps and C-Corps, you got to look at balance sheets, basis, and all this other stuff. This is not, at that point, it's not just simple bookkeeping and classifying expenses. You've got to track your balance sheet needs to add up, and a lot of times the balance sheet don't balance. And if you don't know how to fix that, see, that's the thing about making this stuff look so easy, because you can go anywhere. You can go on different websites and you can create your S-Corp and everything. But if you don't know the rules, if you don't know the requirements, it's going to cost you on the back end. Even trying to, like I'm talking about balance sheets, a lot of times as tax professionals, we get business owners that, hey, I'm this S-Corp. And so the first thing we ask is, let me see your bookkeeping records. And their bookkeeping is still on a spreadsheet. And so then we have to get other bookkeepers involved to get your bookkeeping together. That costs money. When if you had this together in the beginning, it wouldn't cost so much. So people, I have business owners that get really upset at the cost of being able to make that switch from that single member LLC to an S-Corp, I get people upset about the cost, but if you don't invest up front to get the foundation right, yeah, it's going to cost you a lot of money on the back end. If you wind up getting yourself in trouble with the IRS by not filing on time, by not having proper records, or your stuff is just jacked up, it's going to cost you more money on the back end. So even though that there is a benefit to being taxed as an S-Corp, there are things it's not the right decision for everyone. It's just not. There are so many things, there's so many moving parts that you have to take a look at to determine when and if it's right for you and your business. Please stop taking the street committee tax advice because Ray said you should go and get an S-Corp so you can save on self-employment tax. Because what you may be doing is creating a bill that you can't afford, and the going back part is going to cost you more. Okay? So that's it for this episode of Home Biz Tax Talk. Again, I hope this gives you some food for thought in making a decision about business structure. Again, it is not something to be taken lightly. If you've got a question, you need to schedule a consult, you can do it right here, www.homebiztaxchat.com. Thank you again for tuning in, and I'll see you next time. Bye.